Hi guys, this is Rudy Bester from BesterInvestor. We're back with Oxy. I thought what I would do is take a bit of a sort of a shallow dive into Oxy's financials, take a look at the company, sort of see what's under the hood, and see if I can find any interesting information that I can share with you that will perhaps help you in terms of making a decision as to whether Occidental is a company that you would like to invest in or avoid. But on that topic specifically, my standard disclaimer is this video, of course, is not investment advice. So if you do make any investment decisions based on the information that I share with you, you are probably going to lose all your money. So I'd like you to take any information that I share with you and firstly do the homework yourself, and then say Rudy from BesterInvestor basically provides entertainment and some information, but nothing beyond that. So please don't make any investment decisions on the information that I share with you. All right, first thing we're going to look at is Oxy's balance sheet. So the date of this information that I'm sharing with you is March the 31st, 2020. The reason why I'm sharing March the 31st is because that was the last financial results that we have that we can work with until they provide their next quarter's update, which will be, I think it was August the 10th or something like that, so it's coming up soon, sort of a month from today. As a starting point, I'm just going to assume that not everybody necessarily understands a balance sheet, so I'm just going to simplify it as best I can. A balance sheet is basically just the sum total of all your assets have to equal all your liabilities and owner's equity. And to simplify it even more, what I'm going to do is, by way of an illustration, I'll say, let's assume you start a small business as of today, and you are fortunate enough to have $100,000 to invest in that small business. So as of today, you have an asset that's $100,000, which is cash in the bank. Your liabilities are zero, and your owner's equity, therefore, is $100,000. So $100,000 assets equals zero plus $100,000. Now, in really simple terms, that's a balance sheet. So how about Occidental? So these numbers are in millions. So when you look at the assets, it's 101 billion equals $70 billion worth of liabilities plus $31 billion worth of owner's equity. So the first thing that I really want to look at here is, well, the first thing is the balance sheet has to balance. But the first thing I really want to look at here is, what is the owner's equity of Occidental today? So in other words, if we look at those liabilities and we say, okay, so I need to see how you're going to pay this debt and service the interest on the debt, but how much are the shareholders' total value of all the common and preferreds and everything else that's floating out there, what's that worth? And that's worth about $30 billion or thereabouts as of today. So remember that number, because what you have is an owner's equity or a shareholder value of $30 billion according to the balance sheet, which is a financial statement. So moving on. Oxy's market cap is 15 billion. This was as of Friday. Friday was July the 10th. So I just showed you on the previous slide that according to their balance sheet, if you take all their assets and you deduct all their liabilities, the shareholder value of the company is worth about $30 billion. But the market, which is this gray amorphous mass of money in, money out, and timing and high frequency trading and all kinds of stuff, the market values Occidental, the entire company, at $15 billion. That's as of Friday. When we look at the company and we see, where did this asset growth come from over the past couple of years leading up to what we just shared a minute ago in terms of results from 2020 Q1? We can see that there was a huge uptick in assets. So in 2018, Occidental only had 43 billion in assets, and it jumped to over $100 billion. But along with that, you saw a jump in liabilities and stockholder equity. Well, this one's kind of easy to explain, because what happened in 2019 is Occidental acquired Anadarko. And when they acquired Anadarko, of course, the company almost doubled in size. That's why you have assets jumping from 43 to 109. And you had liabilities that almost tripled in size because of taking on arguably too much debt, but nobody could foresee that the oil price was going to crash. And then, of course, you have an uptick in shareholder equity from 20 to 34 or thereabouts. So you can sort of easily understand why there was this huge differential between 2018 and 2019. Whereas, for example, if you look at the assets over the period leading up to the Anadarko acquisition, they didn't actually change that much. So easy to spot and easy to understand why this happened and what happened. If we look at the balance sheet, sort of a snapshot, so what I'm looking at here is, and I'm going to do this very quickly, so you can see that cash and short-term investments are sort of flat over the past 2 years. You can see a huge increase in debt, and of course you can see an increase in equity. Remember, this is from the balance sheet, right? So cash and short-term investments are one of the components of assets. The other assets are all the mining and petroleum assets that they have across the world. Of course, many of them are in the Permian Basin in the United States. But you can see the huge jump in debt. As a shareholder, one of my first questions would be, how will you service this debt? I'm going to briefly discuss this. Many analysts spend a lot of time talking about EBITDA. I'm not necessarily a fan of EBITDA. That doesn't mean that I'm anti using it as a metrics. The meaning is simply EBITDA is earnings before interest, taxes, depreciation, and amortization. And maybe just to explain my position, accounting is a very nuanced sort of science, if I can call it a science. I remember one of my professors once said at university, he said, if you're a CFO and you want to hire a controller, one of the questions you should ask is 1 plus 1. What is 1 plus 1? If the person who's being interviewed says, what would you like it to be, hire him or her, because that's the kind of person that you want on your team. So, of course, it's tongue-in-cheek and it's a bit of a joke, but many of these things, interest and taxes can be deferred. You can take items like depreciation and amortization to reduce your profits, but they don't necessarily impact your cash. So there are many little side notes. In real terms, if you look at a balance sheet, the actual information in the balance sheet is in the notes below rather than in the numbers. But very briefly, in this example here, what I did was I said I'm going to take the operating income and add back the depreciation and amortization, because those ones are the ones that are most easily manipulated. So what I mean by that is not like something untoward or whatever. It's just that if you want to write off depreciation, you could say over what period am I going to write off some information technology or laptops or whatever the case might be. Some people might write it off in 1 year because technology moves and advances so fast. Other people might say, oh, no, this laptop's good for 3 years or whatever, so those little nuances come into play. So if I do what I just said I was going to do, take the operating income, which was negative $1 billion, and add back depreciation and amortization, 2.2 positive, I end up with EBITDA of 1.2 billion. If a positive EBITDA of $1.2 billion makes you happy, that's great. If you say this is meaningless, whatever, whatever makes you happy, that's fine. I'm just kind of giving you a little bit of insight in terms of how it works. I do not attach too much value to EBITDA. I'd rather look at the real numbers. So if we look at the income statement from the financial report from March 31, just for a minute here, as you can see in total revenue, we have a little uptick. I would have expected a much greater bounce because of the acquisition of Anadarko, but at the same time, of course, you have the start of the collapse of the oil and gas market. Remember, this was reported on March 31st. Since then, we've seen a little bit of a recovery. On operating income, Oxy is just kind of barely hanging in there, showing us a little bit of positive operating income, and then total net income dipping negative. So Oxy is an interesting sort of almost dichotomy because it actually makes a higher gross profit than most of its peers in the oil and gas industry, but a much lower net profit. So Oxy is not very efficient at turning its very, very healthy gross profit into a net profit, and then as a result, perhaps investor value. Also, very briefly, let's take a quick look at the cash flow snapshot. So we can see the total cash from investing has just fallen off a cliff here. The total cash from financing is a little bit up, and the total cash from operations is sort of flat or thereabouts. So from a cash flow point of view, this is not a great picture, especially the total cash from investing, but that's just one component of cash. Of course, there are many ways to raise cash, and as we know, Oxy has gone to market in a variety of different ways, including some new debt and some refinancing debt and some warrants that they just issued. So they are doing a variety of different things in order to right-size the ship. All right, let's take a look at some Oxy news. There's always stuff going on, so let's see what's happening here. So by now everybody knows that Oxy has recently, in fact last Monday, was the date of record for existing stock owners to be receiving some warrants, which will be distributed on August the 3rd, I think it is. You'll be able to buy one share of Occidental common for $22 for the next 7 years for every 8 shares of Occidental that you owned on July the 6th. So that issuance of warrants, along with the refinancing of some of the debt, serves a couple of purposes. Obviously, the objective is to raise cash. One of the reasons for the warrants is because right now, because they cut the dividends, Oxy shareholders are getting a symbolic dividend of just a penny per share, which effectively obviously is zero. But the warrants will eventually bring in over $2 billion in cash if exercised. The other thing that's interesting, I just saw this in a little news highlights reel in my TD Ameritrade account. Issuing the warrants was a bit of a snub to Berkshire Hathaway. And you can, if you read something like that, and you say like, oh, okay, I kind of in the footnote, I can probably pick up something about Carl Icahn. But Berkshire Hathaway helped to fund Anadarko's acquisition with preferred shares in exchange for preferred shares, and the preferred shares are not eligible to receive warrants. So all the people who hold common, including people like me, are eligible for warrants, and Berkshire Hathaway had to write a check for $10 billion in exchange for preferred shares with a nice coupon of about 8%, but it's not eligible for warrants. The other thing that's interesting on that same little paragraph, Oxy needed the $10 billion in cash to avoid a shareholder vote on, ironically, issuing new shares. So it's kind of a little bit tongue-in-cheek. I thought I'd add that one just to add a little bit of humor. Berkshire Hathaway owned 2% of Oxy as of March 31st. It received another 2% when the preferred share dividend was paid out in common stock, which was on April the 15th. Berkshire also received 80 million warrants in last year's deal, and that gives Berkshire Hathaway the right to purchase Occidental shares at $62.50 each. So an interesting situation where right now the common stockholders can purchase Oxy for $22 for the next 7 years, and Berkshire Hathaway has warrants that allows it to purchase Oxy shares for $62.50 in the future. Right now, of course, Oxy is trading at about $16, $17 or thereabouts. We'll have to see what happens. There's also another OPEC meeting coming up at the end of July where they'll decide whether they're going to do more cutbacks or just stay as they are. That may affect and impact Oxy as well. The oil price currently is sort of, let's call it $40 or thereabouts on Brent and WTI. WTI is West Texas Intermediate. Is beneficial to Oxy because Oxy globally pumps about 1 billion barrels a day from memory. So an uptick in the oil price per barrel is very significant to Oxy. Okay, so I'm going to sign off on this one right here. Right, I'd like to remind you that you can connect with me on LinkedIn if you'd like. I'm also on Twitter at RudyBest. You are more than welcome to email me. If I have time, I'll respond to your email, rudy@memorytrees.co. Memory Trees is our family's charitable foundation and also affiliated with MTC Equity Partners, which is our Opportunity Zone fund that seeks to invest in distressed assets located in opportunity zones. All right, on that note, I'm going to sign off. Please like the video if you did. And feel free to subscribe. It would be nice to build up a great community of like-minded investors. And I'll go to work and see if I can find another Oxy for us to take a look at in a future video. Thanks for listening. Thanks for watching. This is Rudy for BesterInvestor signing off. Bye-bye.